Hey everyone, this is Robert Keens with goldsilverpros.com. It is Thursday, November 5th, 2020. And man, today, what a difference a day makes. The gold price is up and the silver price is up, and precious metals investors have to be happy. And I think it's up due to election fears, hence the title of the video, something that I have been predicting for a couple of months. The election could change, depending on how it went, the direction of the gold price most likely up. And it appears that that call was correct. We'll get more into that election piece here in a moment, but I wanted to show you the tail of the tape. So we're going to go ahead and do our share screen here. Goldprice.org, as usual, we were up about $60 or so today in the gold price at one point before it came back down a little bit. Not a bad move for gold in one day. And if you look at the silver chart, since the start of the morning, we were up from about 23.70 US to about 25.40 at one point, down to 25.20, so about $1.50 on silver. Very nice moves in both gold and silver. Again, I think having to do with the election news and the uncertainty going on, because we still haven't formally declared a winner, court cases, all of that. We'll get into that in a moment. I actually want to backtrack a little bit because I haven't done a gold and silver update video in quite some time. So what I've done here is we're going to look at some settlement numbers from the CME Group. You can see I printed this from the CME Group website, dating back to the last part of October. So we're going to talk about the last part of October from when we basically started taking deliveries on the November contract and bring it forward to today and show you what's been happening up to today in both gold and silver to get you guys caught up. So as you can see, for the October 28th date, I'm looking at the settlements here. The price of gold and silver fell, and I'm just going to cover gold for this video, but silver is basically a carbon copy. If you want, you can go look at the numbers. But dating back to the last few days of October, we started to see a slide in gold and silver's price. And the reason is this data right here. This 297,000 estimated volume of contracts for the December contract, which is the next big near-term contract. So as a reminder for people who haven't caught up to this video series and been watching me since July, when basically the spot price is determined by the next big contract delivery month, which is December, very clearly, based upon the overall open interest, which is sitting about 450,000 contracts. You take the average of all the settlements for that month, and that determines the spot price. So we see 297,000 contracts volume on October 28th by itself, settling right at this 1879 price. And it started at 1909 and fell. The low was 1869 through the day. So as the day went on, you could see the price falling from where it started at about 1910 to 1879. So a lot of short contracts coming in and longs agreeing to those cheaper prices. Or you could look at it the other way, bearish sentiment in gold leading up to the actual election day, causing gold to fall again on October 28th, 297,000 contracts at 1879. Pulls that gold price down. And that's what happens with all this paper trading. When you look at the average of all the trades, clearly the majority of it here at the 1879.2 range pulls down that price. We're going to fast forward another day to Thursday, October 29th, 2020 for the December 20 contract. As you can see here, fell down to 1868. There were 225,000 contracts at 1868. Now, there was some spattering of interest above that level, 7,806 contracts at 1875, about 4,000 contracts, 1880 to 1885. But again, pulling that gold price down was that 1868 contract settlement on the 29th, preceded by the 1879 on the 28th. Fast forward to the last trading day in October, we had 214,000 contracts at 1879. So again, went back up a little bit, but again, below that $1,900 range. This is why you saw the gold price fall leading up to election week. Now we fast forward to Monday, November 2nd, the first futures trading day, or the paper trading day in November. And you saw the price start to come up a little bit as we got really close to that election. Just as I predicted, it was having an upward effect on the gold price. 166,000 contracts closing at 1892. You had almost 13,000 at 1899 and a smattering of contracts over 1900. So as we got closer to the election, people started bidding up the gold price in the paper futures market. Fast forward to election day. We saw a very healthy 172,621 contracts at 1910. We saw 15,722 at 1917. And we saw about another 5,000 in the 1922 to 1926 range, again, pulling up that gold price. Futures market really pulling it up. I wanted to show you the volume there. The big slam down in price occurred on October 28th on that volume. That's when you saw that fall. So if we go and look at the settlement, here's all of that volume, 297,000 at 1879, followed up on the 29th by 225,000 to 1868. Go look at the chart. You can see these volume numbers for these 2 days. That's what's pulling down the price. And then, of course, as we got closer to the election, it started to go long here and really pumped up long on November 4th, the day after the election results started to weigh in. And I think all of the uncertainty about who's actually going to win the election, the fact that we couldn't officially call a winner on the night of, like we typically do in past elections, which has been, our tradition for forever, has increased uncertainty in the market, and that's bidding up the gold price to where we closed today at 1945.77, or we're trading right now at 1945.77. We actually closed a little higher than that in regular US trading. And for silver, sitting at 25.16. So a nice little bump in both of the precious metals because of the fears and the uncertainty around the election results. Got us to where we are. Same thing in silver, the slam down on October 28th. This is the silver volume chart. October 28th, big slam down. And then it started to peter off a little bit until we got to the election. And then the longs came back in, or people came back in to bid up on the long side the silver price due to the election as well. Again, this is mostly in the December contract. As you can see, this has the most volume, a little bit in November, but not much. We did have 109 deliveries on November 4th for silver and some for gold. We'll get into that issues report. We're going to look at the monthly view. Now, remember, the first intent day to take delivery occurs 2 days before the first trading day of the month. So basically, we started noticing intent to deliver gold here on the 29th. The same thing with silver down here on the 29th. Gold, we had a very healthy 1258 number come in. Then we had, leading up to the election, it kind of slowed down a little bit. And then the day after the election, look at this, 1,515 contracts coming into gold when we don't have a lot of open interest. Right now, there's only 1,628 open interest in gold. And yesterday, we had almost as many deliveries on that day as we had total open interest for that November contract. In other words, November is not a heavy trading month traditionally, and certainly not this year for the metals. So you're not going to see a lot of physical deliveries. But because of the uncertainty of the election, who's going to be leading our country in 2021 on, a lot of deliveries, almost as many deliveries as the total amount of open interest. That's a big, big, big number for a thinly traded month. And I think that delivery number, along with longs coming in on the paper trades, really bid up the gold price as well as silver. You see almost the same thing happening in silver, although people came in the beginning of the month and really, or the first intent day for the November contract on October 29th, and wanted 255 contracts, stood for delivery, 255 contracts of 5,000 ounce. And then on the election day did 109. And then on November 4th, it kind of slowed down a little bit. Silver not being quite as much of a crisis investing metal, didn't get quite the bump on election day, but certainly enough to start off the month on a very thinly traded month. So those are big numbers for what we didn't expect to be, for physical deliveries, for what we didn't expect to be a highly traded month in November. Does not surprise me at all, because the election, we said that would happen. And again, prices going up in gold and silver because of this uncertainty in the election. You see this nice little tick up day after the election in gold, day after the election in silver. So our call there was correct. We expected it to go up no matter what happened. And we might have gotten the worst possible scenario. We'll get to that here in a moment in terms of worst possible scenario in terms of the uncertainty of the election driving forward the precious metals price. Positive for those of you who hold metals, negative for the country not having the answers as to who's going to be the president. So going over here to Nick Laird's site, at Gold Charts RS, I wanted to look at the gold deliveries. I still download some of the daily spreadsheets that you get from COMEX, but it's so annoying. They only give you it by day, and they don't give you an historical view at COMEX. I've started looking at Nick Laird's site to look at deliveries. You can see that since the summertime, we've had just a nice about a nice volume in the contracts, but the deliveries have spiked up starting in the summer when we started covering it. Remember, we said gold and silver are going to spike up and we were covering these deliveries. They've fallen off a bit, but at the end of the year, as we got closer to November, they started to spike up. You see this little bowl. If you can see my cursor, this little bowl formation in the deliveries, I expect this bowl to keep going up as we get into December and spike up quite a bit. And that's a nice little bullish formation in the overall deliveries in the chart. You can see on the cumulative stop deliveries in 2020, it is just stair-stepped up. And you can see these little blips. A lot of spike deliveries in April, again in June, then again in August. And you see these little spikes up in this number. It's been a stair-step up. And then I think when we get to December, we have that massive amount of gold futures. We'll go there on the gold volume chart. Right now for the December contract, we've got 403,797 open interest. I expect a lot of that to be delivered. You're going to see this stair step up in these gold deliveries. In fact, instead of these little baby stairs, we could see a boom, a big stair just like that is what I expect in December. And I think that's going to spike the price up. Here's another little view, a monthly view on the COMEX gold deliveries. Look at where we are for the year. For those of you who may be bearish on gold, this deliveries that have been taken in gold off of the COMEX dwarf what's ever been taken in gold since this data has been collected dating back to early 2000s. And well, really since CME Group has been expanded their reporting, and even more than 2011, 2009, 2011, the last financial crisis. You know, we had really nice little numbers here, but it wasn't too far off even the physical deliveries from what we noticed in the 2000s. The whole 2000s were about the same. 2011 didn't spike up past the normal last decade, you know, 2000, 2010 of gold deliveries. You could say this is a relatively normal market. Yeah, there were some spikes up here as uncertainty led up to the financial crisis, the mortgage crisis, but it wasn't, you know, overall that interesting. But look at what we've had in 2020, an extremely interesting amount of deliveries on the COMEX in 2020, leading up to the election. This is before we even got the uncertainty of the election. It was basically the shutdowns and then the election, all those fears we've had in 2020 and the uncertainty in the other markets, the bond markets, the stock markets, all the other markets people participate in. People were starting to take physical delivery. And remember who takes delivery from looking at the COTS charts. It's going to be the wealthy individuals this year, the wealthy families, the family offices, the trusts, those other reportable category. And it's also going to be some of the bullion banks for their clients. So the wealthy are taking delivery of gold in 2020. I think because of the economic shutdowns and what was going to happen in the election, those are two of the biggest predictors of the gold deliveries for this year. Silver, a very similar chart. We're looking at the overall silver deliveries. Of course, during the summer, we called it. We thought there would be more physical delivery. We were correct, and we called the rise in silver price because of that. And then you can see a little bit of a bowl shape forming, although it's not the same as gold. Silver deliveries haven't spiked really in October and November. It's been relatively modest, but I think in December, we're going to get a nice boost. You're going to see these lines pull up in December because, again, going back to the silver chart, go back to the right chart. Excuse me, guys. The silver volume chart. You look at December and it has 110,000 open interest still. That's the next biggest month in December. So we expect a lot of deliveries and then probably again in March because we got a nice healthy 30,000 contract there. So we think silver has got some strong headwinds price wise, you know, for the next 3 to 4 months. And we don't expect the price really to fall too much during that period of time, as long as it doesn't get slammed down in the paper markets. But we expect to have strong deliveries. And again, look at 2020 for silver. Look at those massive deliveries for silver. Now, a lot of this is industrial use. We feel as though, based upon the data, even though we can't confirm by actual transactions, we feel as though the industrial users, the Samsungs of the world, the Apples of the world, whoever the case may be, are starting to secure their silver because of silver shortages. So even though silver is a crisis investment, much like gold, it's also very industrial most of the time. So we feel like some of what we're seeing here, this spike in actual deliveries in 2020, more has to do with the industrial demand and the shortages of physical silver that we see. And so now they're going to get it from COMEX and maybe also negotiating deals directly with the mines versus what we had seen in the past, even during 2008 to 2011 run up in price of silver up to 49, almost $50 an ounce. So again, massive deliveries in silver as well during 2020 that have dwarfed anything we've seen in the data since it's been provided. So again, I think very strong bullish trends for both gold and silver heading into December because of the elections and then heading into the big delivery month in December. It appears that call that we have been making the last couple of months has been true. Now, I got a bit of news for you guys who may be investing in exchange traded receipt programs through the Royal Canadian Mint. This is big news that came out last week. I wanted to share it with you on this video. Here is the link. It's newswire.ca. Put out the story. Royal Canadian Mint announces amendments to the Canadian Gold Reserves and Canadian Silver Reserves exchange traded receipt programs. And this is, there's two things in this that may end up blowing your mind. So I'm going to read from the press release. I'm going to highlight this. The Royal Canadian Mint is announcing amendments to its Canadian Gold Reserve and Canadian Silver Reserves exchange traded receipt, or ETR, programs, hence forth referred to as the programs, relating to redemptions of physical gold and silver bullion and liability exceptions pertaining to the risk of loss of bullion. So they're changing their liability exemptions. Additional risks that the Royal Canadian Mint is seeing in regards to its gold holdings and silver holdings. It says here, effective November 2nd, 2020, in circumstances in which a suspension or postponement of redemptions would otherwise be warranted, meaning they can't deliver on their promise to deliver physical metal for an ETR, the Mint will be permitted to provide ETR holders redeeming for physical gold and silver bullion with substituted products. In other words, not what you thought you were purchasing. That's interesting. This would occur if the Mint determines that conditions exist which render impractical the fabrication or valuation or sale of gold or silver of certain physical gold or silver bullion products. In other words, if they can't get the gold and silver required to mint you what you bought, they can substitute other things. Further reading, in such a circumstance, the Mint may, in addition to suspending redemptions, okay, now this is different. They were saying they could substitute products. Now they're saying they could suspend redemptions or postpone the date of delivery, for various reasons. Now wait till you see what the reasons are that they've added to the list. It's going to blow your mind. Okay, sale of gold or silver or certain physical gold or silver bullion products. In such a circumstance, the Mint may, in addition to suspending redemptions and postponing the date of delivery or payment of redemption, substitute the physical bullion requested by an ETR holder for a product in the form requested, but manufactured by a party other than the Mint, a non-Mint product, with equivalent minimum purity, so on and so forth. This amendment is expected to provide flexibility to permit the Mint to continue to satisfy redemption requests for physical bullion in circumstances which redemptions could have otherwise suspended or postponed. So there could be existing issues like, I don't know, war, earthquake, fire, those types of things that you would have in an insurance policy, and that they would also put into their policies for redemption, acts of God, things like that. But wait till you see what additional events are being added. This is kind of gets a little scary and eerie, but I want you guys to listen to what they're adding to the risk of loss and exclude events that they didn't have before. In other words, they think these risks have gone up for certain reasons, and they're adding them to their policy. Effective as of February 1, 2021, that's here in a couple months, the Mint is making additions to the list of events pursuant to which the Mint will not be liable for loss, damage, or destruction of the gold or silver bullion owned by the ETR holders and held by the Mint. The Mint bears all risk of physical loss, damage, or destruction of gold, silver owned by the holders and stored at the Mint's facility, except for any loss, damage, or destruction as a result of circumstances or causes beyond the Mint's reasonable control, e.g. an excluded event. And they're going to define what additional excluded events are here. Wait till you read this. The Mint is adding to the list of excluded events nuclear reactions, nuclear radiation, radioactive contamination, and biochemical weapons to conform to its insurance policy. As a result, effective as February 1, 2021, any loss, damage, or destruction of gold or silver bullion owned by ETR holders directly or indirectly caused by or contributed to by result of any nuclear reaction, radiation, radioactive contamination, or biochemical weapon will be the responsibility of ETR holders and not the Mint. They're talking about nuclear war, nuclear meltdown, and biological warfare. Wow. They didn't hold this before. They didn't think there's a risk, but apparently Canada is thinking we could get hit by a nuke or a biological or biochemical weapon. So we're going to add those to our list of exemptions that if that happens, we may either suspend redemptions, postpone them, or give you a substitute product if they can get their hands on it. What does that say about what the Royal Canadian Mint thinks is going to happen in the political and the political landscape, certainly in 2021. Do they see additional risk in the political landscape? I would say so. Who would be attacking Canada? It wouldn't be the US. Would it be China, Russia, BRIC nation? I don't even know who Canada's enemies are. Who hates Canada? I mean, a lot of the US has a lot of enemies. How many enemies does Canada have? My goodness gracious, that is a major, major announcement. So if you guys are up in Canada, you're in the ETR program, just be aware of that. It's really interesting just because the reasons why they did it, but also for the risk reasons, but also for the fact that they could suspend redemptions for all of these, what they call excluded events, which now include biological and nuclear risks. Very, very interesting by the Royal Canadian Mint to do that now for 2021. What do they see as the risk of some sort of hot war or biological event happening, terrorist event happening in 2021? Gosh, talking about risk, I think there's a lot more risk going on because of the elections. Like I said, I alluded to earlier in the video, we didn't have an outcome for the elections. We don't know if Biden has won or Trump has won. Certainly the Biden camp is claiming more votes. A lot of the services are claiming votes. As I talked about with Alex Newman on the election special this last Sunday before the election, evidence of voter fraud is coming out in droves, shutting down poll places, sending monitors home before they count votes, magically getting new votes in that weren't there before. In Wisconsin, I think I saw a news story in the general media, not alternative media, the general media, in which they claimed that Wisconsin residents, 100,000 more Wisconsin residents voted than were registered to vote, which is physically impossible. That means there's fraud by that 100,000. And we're assuming that the 100% of all the registered voters actually showed up. When does that actually happen? Almost never in an election. The average is something like 55%, I think, in most presidential elections. If we're saying that 100% showed up, which could be, it's a big year for both sides vying for control of the House and the Senate and the presidency. Very contested election. Yeah, maybe we got from an average of 55 to 60, 70, 80, but 100 plus 100,000 additional votes that weren't registered. Blatant fraud, at least for the 100,000 over those registered, because they shouldn't have been able to vote if you're not registered. But what about the other 45% that we don't normally see show up to the polls, or any of those fraudulent votes? We don't know. Late night. The governor of Michigan, I think, came out today, ejected the Republican monitors from the polling location, allowed only the Democratic Party monitors to stay, counted the votes, and then after that, Biden had a lead. So just blatant voter fraud going on. And I think that's probably why you saw gold and silver spike up today. Now, I knew the election would be contested in terms of who actually won. I didn't predict a winner. I'm not a Republican. I'm not a Democrat. I'm a registered independent. So, and I didn't predict a winner. I didn't have a dog in the hunt in terms of either side. I was voting for either side. I actually voted for third party, Constitution Party, just, if anybody cares. And this is not a heavy political channel, so I don't bring a lot of politics into it. But when you have a presidential election and you have what's been going on in the news media for this year and all of the arguing going on, the very interesting debates, I really wanted to cover politics this year that I haven't covered in the past, because I thought it would have a big effect on the gold and silver price. And boy, has it ever. We still don't know who's going to be the president. That's why I expect gold and silver to march up to previous highs we saw earlier this year. Wouldn't surprise me if gold passes 2,000 even before we get to December, because of all the contention in this presidential race. And not only that, but it looks like whoever wins, we're going to have gridlock, because it looks like the Republicans are going to maintain control of the Senate. Whether or not Trump or Biden gets elected, we're going to have gridlock in getting laws passed, getting things done. We could see if Trump loses and doesn't agree with it, him taking this to the Supreme Court. His camp has started lawsuits in, I think, 4 or 5 states now, contesting the votes, wanting a recount, trying to stop some of the counting going on, and alleging that, some of the votes are being counted after they legally should have been, depending on state rules. I mean, I could see this going on through the end of the year. So I think November is going to be, we'll certainly see some volatility in the precious metals prices, risk on, risk off, depending on how this situation with the presidency goes, how contentious it gets. I think overall, it's probably bullish for the precious metals. People are going to go to those safe haven assets. They're going to bid up gold and silver. Again, wouldn't surprise me to see $30 silver and 2,000 gold by the time we get around to delivery month in December and those massive amount of open interest. So I think it's nothing but bullish for gold and silver. And it's kind of as we've been calling it the last couple of months. Presidential election was probably going to be bullish either way for gold and silver. And again, I said at the beginning of this video, the worst of all outcomes, meaning we don't know who's the president, and that's the worst of all outcomes for the country. But that's driving people into those fear assets, those safe haven assets, gold and silver, and that's definitely what's happening. And that's going to be interesting. We're going to continue covering it for the rest of this month. Hope you guys enjoyed the video. Until next time, this is Robert Keens of goldsilverpros.com.